All right, y'all. This is chapter 7, my home loan problem. And this is, I said some other sections like the invisible will and the kind of like the generational curses and overcoming the family curse, that those were the most important sections. And that is true because it tells you that you have to look in your history to make sure that your future is going to become better. Your present and future will be better. All of this information is based on me. So as I'm reading this to you, I'm not attempting to be a financial advisor at all. I'm simply trying to move you towards understanding what it took for me to become a person in a better situation. And I'm still learning. We're all still learning. You're a lifetime learner, and if you commit to always learning, man, things in your life can be a whole lot easier. But that gets me off topic. Let's jump into chapter 7, my home loan problem, because this is it's another important section. Everything here is important, so I should really stop saying that. Home ownership is the primary source of financial empowerment. And when I wrote this, that's what I thought, because that's what I always heard. I no longer think that's true for everyone. You get people, and this is deviating a little bit. You get some people who will condemn a guy who lives in an apartment who drives $100,000 car. Why don't you have a house? I'm here to tell you a house is expensive. And that guy that has the apartment, you know what he doesn't have to do? When the air conditioner goes out, he doesn't have to pay $5,000 for a new AC unit. When the water heater goes out, he doesn't have to pay $3,000 for a new water heater and a AC unit and thermocouples and all the stuff that goes on top of, heating and cooling your house. When the garbage disposal goes out, he doesn't have to do any of that. All of that money he may be paying out, he may not be earning equity in that apartment that he's living in. But to knock that guy for having an expensive car and living in an apartment could be a little bit faulty, especially if he isn't really looking at home ownership as his path to a better life. He could have investments in mutual funds, in the stock market. He could have just downloaded the Robinhood app and dropped the money that he would be paying for a house into the Robinhood app, especially if he's in his 20s or 30s. You know what I mean? You got 30 years to pay for a house if you get those kind of loans, or you can double up and pay it off early. But all of that is neither here nor there. I'm just saying, be careful with the way you look at other people and their circumstances. You don't know what the circumstance is. You don't know how well off they actually are. Assumptions to assume makes an ass out of you and me. ASSUME, right? So don't assume. Don't assume at all. But my home ownership journey is really interesting because, like I said, I've gone through all of these different things. Our fence blew down and the insurance covered part of the fence, but the things on top of the roof had flown off. You have, gosh, man, you have to pay deductibles, and there's always something going on with the house. I had to get it painted and get the wood replaced on the house. It's just a lot that goes on with the house. Now, this is me talking after living in this house for a while and not giving you the story. So let's get back to it. The reason most Americans who have financial stability are in the position they are in is because they have the great fortune of being raised in a family where home ownership is a constant and the ownership of land is also a component. So, yeah, I do believe that home ownership and land ownership is extremely important in building wealth. Do you have to have it? No, you can begin the process of earning and getting a better life without home ownership. You can. And I don't know why I'm trying to justify all of this, but let's keep going. Think about this. If you own a home, your children can be educated. You can borrow against a home to start a business. You can even place credit card debt under the home through a second mortgage. Do I recommend all of those things? Yeah, possibly. It just depends on the situation. In other words, a home is an asset that creates wealth as long as the home is kept in good shape. That's extremely important, man. If your home value, like our home value in the last 4 years, has gone from 140,000, it's now at 270,000. So our home value went up considerably. And if we have to, we can pull from the home and pay for our son's education if we have to, right? So there's that opportunity. But it's because all of those things I said when I had to repair those different parts of the house, it's because I repaired all those different parts of the house and we kept the house in fairly good shape. We do need to get some things renovated, but let's keep going. The primary issue for most of the people that are reading the book is if you're coming from where I came from, you're a first generation homeowner. And man, that's expensive because there's things that you just don't know. Because often first homes are an extreme learning experience. I mean, seriously. And if we look back at like 2008, a lot of homes ended up in foreclosure. But it's the other problems that you encounter when you have a home that can really break you. Now, we came within 2 days of losing our home to foreclosure. So your question should be why? I got this news show, right? And I recorded it from a network television station. Now this tells you how old it is, back in the early 2000s. That news show is about the new face of homelessness. I kept the show on tape to show to students in high school and college. I think we all have distorted views of homelessness in America. We think that homeless people are lazy, panhandling bums. When in all honesty, and we saw this during the quarantine, many Americans are only a few steps from the poorhouse and homelessness. Now, I was a full-time professor at a college on salary, and as far as private colleges go, I was almost at market value, but not quite. But at the time that I'm writing this, right before I was writing this, we were getting ready to add a new addition to the family, my daughter. And I thought that we wouldn't be able to afford it. So I requested a raise. I went into the dean and requested a raise. The raise was denied. But it was denied in such a way that I felt slighted and mistreated. I was told by the dean of faculty that it's better to have a low-paying job than no job at all. And I snapped. And like I said, I have a lot of issues that I deal with myself. I've learned to somewhat master a lot of them now. But at that time, I went off. Specifically because I found out that someone with a lower degree than mine was making more money than me, and they were not the same race as me, and this was at a black college. And that created a lot of different problems for me. But I didn't know how to negotiate a contract. That person did, and they made more money, and I was hurt and offended that they would pay me less than someone teaching a non-critical subject. That's digressing a little bit, but I'm explaining here. When she said it was better to have a low-paying job than no job, it was basically saying it's okay to be a slave and never be paid what you're worth as long as you're getting something. I couldn't stand that. I walked in immediately to my office, packed my stuff, and I quit. Got home, I told my wife that I need to start working on my own thing. But doing so put us in a horrible situation. But I started writing notes, and those notes became this 1 hour to wealth plan, right? I was running websites and doing a lot of different things at the time, so I had a lot going on, but it wasn't generating a ton of money, right? I loved my job at that college. I loved being a college professor. It was We were making short films. We were producing books. The students were incredible. But it's not the student's job to make the professor feel valued and important. Value has to be throughout the entire organization. No matter what you're doing, even if you love your job, you should always get your worth. Always get your worth. Accepting anything less is admitting that you are only worth what people think you're worth. And that's a problem. I realized when she said that I'd have to establish some things that would give my family security to live comfortably. I was working like a dog as a college professor because you had 4 classes, and with those 4 classes, to get to a certain amount of income, you have to take on 2 extra classes, which are called overloads. And then you take on an adjunct course, maybe at another college. So you're teaching 7 classes, and that's burdensome. And at the same time, I was running a basketball website, and I was selling sneakers, and had my own sneaker company selling sneakers. I was overwhelmed, but I loved what I was doing, so it didn't hurt me. But when I got that level of disrespect, I realized that I needed something more. So we had been in business. My wife and I, we had our own separate thing beyond the basketball stuff. And that was a publishing company. And we were like, hey, let's work on a plan and start writing and publishing. And so she did a comic strip book, which was awesome. She was one of the first women in the natural hair space. She got away from that because we started homeschooling. But it was just a really good situation, even though what we were planning on doing was catching up on bills with my salary from that full-time position that I just quit. She didn't even bat an eye. She didn't complain. I'm not saying that your wife should be like fully on board with you quitting a job. I'm just saying she didn't complain. She was like, nah, that's not the type of disrespect that I would expect you to take. But I was planning on paying bills with that salary. When I quit that job, it was at the beginning of the semester, basically a few days before the semester started, which means it was too late for me to get jobs anywhere else other than my couple of adjunct courses. And it wasn't even a couple. I had a couple of overloads at that school where I was a full-time, and then I had 1 extra class. So that meant I only had 1 course that was an adjunct course, right? But an adjunct professor doesn't get paid until the end of the semester. In other words, you work the whole semester. You don't get a check until the end of the semester. And now I think a lot of that has changed recently. In recent years, they'll pay you through the semester, and then you'll get your final check at the end of the semester, right? But we were going to catch up on bills. But me quitting meant that we weren't going to get a paycheck for at least 4 months. And while the business had been paying the business bills, I hadn't created a situation where the business could pay for the household finances as well. So 1 month went by, then 2, then 3. And at that 3rd month, before we knew it, we were 3 months behind on all of our bills, with another 2 months to go before receiving any income. Remember, the semester starts around August all the way till December. Things were difficult, man. That's an understatement. So at the end of that semester, I wanted to pick up more adjunct courses, and I called around and I got maybe a couple. But going into the following semester, I was like, well, some money's going to be coming in. But the fact that we were already 3 months behind, and that's all it takes is 3 months for the foreclosure process to start or for them to repossess your car. And we went through all of these things. And the house was going into foreclosure because we hadn't paid for 3 months. I'm not embarrassed about saying this, man. The whole point of doing this book and reading it to you guys and talking about this stuff is, if you don't understand, in that first introduction video where I showed you my 1099K and how much money I was making, it was important to show you that at the time I was making $500,000 when I started this book, because until that point, we were as low as you could go. Way low. Now, fortunately for us, our scenario was slightly different from other first-time homeowners. Actually, it wasn't, that different. It was just a variation. It was a variation. So this is what happened with this house. I basically inherited the home from my mother when she died. Now, that inheritance doesn't mean that the house was paid for. It did mean that the house was never in our name. It was in the name of the estate. So when we began missing payments and stuff like that, it didn't reflect on our credit at the time. So we were in good shape as far as credit was concerned, but missing payments on the cars and everything else, it just began to pile up. And then my sister was like, whoa, wait a minute. I got to go ahead and get this house over into your name. And she did a quit claim. And it was deeded, and now the name or the deed was in our name, right? So this is the crazy part. For years, we had been paying taxes on the home, but we were unable to reap the benefits of being homeowners on our taxes because it was not in our name. So once the home began to go into foreclosure, my sister was like, yo, get this thing away from under my financial umbrella. She did that quit claim and the quit deed, and the house went into the name. And now we were at a point where we could talk to everybody involved with the home process. And I know this is a lot, man. And this is going to be a long chapter, and I hope you're sticking with me because it's important, especially for those of you who are getting ready to go into a home, or those of you who have a home and you're in a financial bind right now. It's important to hear these kind of stories, because if you don't, you need to hear it. Now, at this point, you have to pay attention, right? Because I had been attempting to deal with the mortgage company, but due to my name not being on the property, I couldn't. So finally, with the home in my name, I was able to talk with the mortgage company and to the lawyers who had started the foreclosure process. And as I said earlier in the book, you can't avoid phone calls when you are in debt. You have to talk with the creditors. In our case, this was the best thing for us. Now, a lot of people avoid the creditors. I just don't think you should. The first thing that we discussed was setting up a repayment plan. So by the time I started getting checks in from adjunct, teaching, and by the time the business part was making a little bit of money that was going directly to the business bills, I was like, okay, I can kind of get my feet under me. And we talked about setting up a repayment plan. Now, in my instance, we didn't have a horrible loan. The bank doesn't want to foreclose on you because, now, this is kind of a generalization, because some banks probably do want to foreclose on you and get the property back, and they want to, because everybody's getting into home ownership now. It's a completely different situation now. But the first thing we did was set up the repayment plan. And if you fail to make payments, right, on your home, and you're in a bind, if you don't have any money, there's not much you can do. You go out and you find money and you're making some money. Now you can speak with the lawyers and the mortgage people and ask them about the repayment options. The lawyers who handle the foreclosure will set up a 1-year payment, right? Because we had fallen behind. I think it was 6 months by the time I started getting checks in from the colleges. They set up basically what was a 1-year payment plan, and that would allow us to pay a smaller payment to catch up on the mortgage that we missed. So we needed to catch up on the mortgages payments that we missed to prove to them that we were capable, right? So they will reinstate the loan if those smaller payments are on time during that 1-year period. That's important. The repayment process it can be expensive because it includes all of these missed mortgage payments and the interest and everything else. But this varies by every situation. So what I'm saying that happened to me is not probably the same that happens to you, but hopefully it kind of helps you to think about your own problem, right? Repayment is an option. Repayment is an option that really beats the hell out of losing your home in some instances. Now, certain instances, like in 2008, when I was reflecting on when these things were happening, it was like 2008. People had balloon loan payments. They had these payments that would, gosh, what was it called? I can't even remember what it was called right now. I'll put it in the video so you'll see me pop this up but this was what happened with the housing crisis. They had these balloon payments where the interest was here and then the interest skyrocketed and people started losing their homes. And this is what caused the collapse of the financial markets in 2008. People had bought a bunch of loans from different companies and everyone was selling loans. But that's not what this is about. I am not a real estate person, so that's not for me to talk about. What I want to get into after I'm telling you about this repayment plan, I want to get into what is basically the second option that you have when you go into that foreclosure process, and that's called a modification. So you can get a modification to your loan. If your home is going into the foreclosure process, it does not hurt you to pick up the phone and ask your lender if there is a modification that can be done. Remember, I talked about modifications earlier in regard to car payments. A modification takes the original loan and does exactly what it sounds like. It rearranges the loan. The modification will require a one-time payment to catch up on missed payments. Basically, this is a settlement that can be discussed. Once this payment takes place and the new loan is put into place, then you will have about 90 days before you have to make your next mortgage payment. You get breathing room. All of these things in financial situations require you to be able to take a step back, survey the situation, and then make decisions. You need this breathing room because sometimes all you need is just a respite, a break, a little time to catch your breath so you can get your stuff together. Picking up the phone, contacting your creditors will allow you to have this breathing room. And that, when you have that breathing room, that'll begin the process of learning what your 1 hour to wealth plan will be. You got to have that breathing room.